Islamic banking. There are different banking systems in the world, but the most famous ones are conventional banking and Islamic banking. The main function of conventional banking can be summed up in one sentence: the banks borrow to lend. They borrow in the form of deposits and lend this money to earn interest. On the contrary, the Islamic banking system is based on the principle of partnership. In Islamic banking, the shareholders, the depositors, and the borrowers all would participate on a profit-loss sharing basis. The Islamic banking framework. Islamic banking is a finance management system that is based on the Islamic rules of Sharia. The main concept of the Islamic banking is the prohibition on collection of interest and its utilization for the business purposes. Banking in Islam is a saving money framework that depends on the standards of Islamic law, additionally known as Sharia law, and guided by Islamic financial matters. Two fundamental standards behind Islamic banking concepts are the sharing of benefit and misfortune. Gathering interest, or Riba, isn't allowed under the Islamic law. Islamic banking concepts have an indistinguishable reason from traditional managing of an account, aside from that it works as per the guidelines of Sharia, known as fiqhul mu'amalat. Banking in Islam as an account exercises must be polished, reliable, with the Sharia and its pragmatic application through the improvement of Islamic financial aspects. A significant number of these standards whereupon banking in Islam is based are regularly acknowledged everywhere throughout the world, for quite a long time as opposed to decades. These standards are not new, but rather their unique state has been changed throughout the hundreds of years. The concept of Islamic banking in early ages of Islam. The history of banking in Islam goes back to the earliest reference point of Islam in the 7th century. The first spouse of the Prophet Muhammad, peace be upon him, Khadija, was a trader, and he went about as a specialist for her business, utilizing a significant number of similar standards utilized as a part of contemporary Islamic banking concepts. In the Middle Ages, exchange and business activity in the Muslim world depended on Islamic rules as account standards, and these thoughts spread all through Spain, the Baltic states, and the Mediterranean, giving a portion of the premise to Western standards. From the 1960s to the 1970s, the modern world accepted the Islamic banking system. How does Islamic banking work? It is important that you understand the rules to know how Islamic banking works. There is a consensus among the Sharia scholars that credit price of a commodity can genuinely be more than its cash price. The Islamic Fiqh Academy of OIC and Sharia boards of all Islamic banks approve the legality of this difference. However, no addition to price once mutually agreed. Keeping in mind the end goal to procure cash without charging premium, Islamic banks utilize value support frameworks. This implies if a bank credits cash to a business, the business pays back the advance without premium, yet it gives the bank an offer in its benefits. In the event that the business defaults on the advance or do not win any benefits, the bank does not get any benefit either. Is Islamic banking really Islamic? Yes, but only if it is being practiced on the basis of rules and regulations defined by Islamic Sharia. In case any organization is not following the Islamic rules, it is not allowed to claim itself as an Islamic bank.